The question of paying off your home's mortgage has remained a timeless debate for a lot of people, but especially over the past few years, more and more people considered paying down their mortgage in order to lessen their debt burden, provide insulation in the event of financial instability. And of course, we're certainly seeing that with rising inflation and unexpected layoffs happening right now in the economy. It's kind of a mess. So when you have American companies implementing swift, widespread layoffs, many people are worried about how they should fare if they lose their job this year. Lately on the show, we've really been drilling into how to protect yourself during these volatile times of high inflation, endless job layoffs, record rates of consumer debt. We're really trying to help you as much as we can right now. So you probably already know that now is the perfect time to pay off any risky, high-interest credit card debt. But one question I've been getting a lot is, quote, should I pay off my mortgage in 2024, end quote. I mean, so many of you have written me this email. So many of you have left me comments about that. So let's unpack this question on today's show, including specific points that you should consider when making this decision. There's so many different factors that go into weighing whether or not you should pay off your mortgage. Unfortunately, it's not as black and white as you might have hoped when you clicked on this video, like a simple yes or no in a 5-minute video, and good, your life has changed. Okay, there's a lot of granularity to this. In general, I've always thought that paying off your mortgage can be a smart strategy, but I've always maintained that it's really a personal decision. It can depend on your interest rate, other types of expenses in your life, your goals as a person, right? And your overall tolerance for debt. A friend of mine who wrote the book Rich Dad, Poor Dad, Robert Kiyosaki, he's got thousands of properties and he has billions in debt, but he uses that debt to operate. Would you be okay operating like Robert Kiyosaki? I personally wouldn't be happy with that much debt, but he does. He's fine and he knows how to manage it. Now, I have lower debt on different mortgages that we use to buy our different properties, but nevertheless, you'd have to do you. You have to find out what makes sense for you. Like most other things in the realm of finance, there's not a one-size-fits-all answer. There's no denying the multitude of benefits that accompanying paying off your mortgage includes, saving money on interest and having fewer monthly expenses. Imagine not having that mortgage payment every month, right? Paying off your mortgage can really pay off in the long run, saving you thousands of dollars in interest charges, reducing the life of your loan. I mean, a 30-year mortgage is a big commitment, but if you're among the thousands of Americans that carries a balance on their credit card month after month, accruing these offensive interest rate charges, you may want to focus on those debts first. Now, the Federal Reserve's Consumer Credit Report listed the average APR on credit cards is now 22.75%. It's crazy. Some store credit cards have interest rates as high as 33%. If you have this kind of debt on your balance sheet, I can guarantee you that this much debt is hurting you much more than a mortgage with interest in the 3 to 7% range. But if you're otherwise in a good position in terms of your overall debt burden, paying off your mortgage can afford you a lot of freedom. Housing is the number one expense for most people, so getting that weight off your shoulders can free up your budget in an impactful way. The average mortgage payment in the United States is over $2,500 a month, so freeing up that monthly expense can obviously be a big relief. Ultimately, making this decision comes down to your priorities. Another thing to consider is that while paying off your mortgage can improve your finances, you're technically not making your money work for you by paying off debt. To weigh your options here, check out this video on paying off debt versus investing, where I walk you through specific points to consider, including how to weigh your interest rate, the impact your debt is having on your mental health, and ideas for buying assets that can actually pay your mortgage down for you. Now, if you're worried about the state of the economy and your job stability, it's a perfectly reasonable thing to think about. Paying down your mortgage could help you should you hit financial turbulence later this year. I mean, reducing your overall expenses, your overall exposure to the market right now is always a good thing. But at the end of the day, you're always going to have some level of bills and food expenses, right? Think about it like this. If you were to lose your job, clearly having no mortgage payment would be helpful, but for how long? Even without a monthly mortgage payment, most people couldn't live very long with zero income. I mean, maybe if you grow your own food, you live off the grid, you have no phone, you have no internet service. But if you're watching this on YouTube or Rumble, chances are I don't think that's the case. So what actually may be more impactful for you is diversifying your sources of income and investing in inflation-resistant assets that can actually help you pay your expenses every month. That way, if you do find yourself in some sort of financial upheaval, you don't have to worry about money or keeping a roof over your head. And for most people, this is much more achievable than reducing your expenses. We'll get back to that video in a minute, but first, I need to tell you about a golden opportunity for investors that's happening right now. Mortgage rates have plummeted in anticipation of the Federal Reserve cutting interest rates at their upcoming meeting in September. Now, it's good news for buyers, and it has presented a unique overlap in the investing world right now. Remember, when mortgage rates spiked last year, well, a lot of sellers started offering incentives to help investors achieve positive cash flow. For example, my company, Morris Invest, and our team over at Sedera Wealth started offering clients a rate buy-down credit. Now, a rate buy-down drastically reduces your mortgage payment. If you've ever run the numbers on an investment property, you know that's a big deal. Now, here's where the golden opportunity comes in. When mortgage rates change, it can take a while for other things like seller incentives to start catching up. So even though you can get a mortgage rate in the low sixes right now, and that could be even lower by the time you're seeing this video, right now you can also lock in a rate buy-down credit on top of that. And this is huge, people, huge. With the two combined, our team's finance expert said he's seeing our clients locking in rates he hasn't seen in years. But here's the catch. The window of opportunity here is very narrow. This overlap will close very soon. So those seller incentives are going to fall off very, very soon. There are two more reasons to move quickly on this. One, prices are rising week over week. And now that rates are going down, they're going to spike even more dramatically, which will be made worse by two, increasing competition. Potential buyers have been sitting on the sidelines just waiting for rates to drop. And now that they have, they're going to flood the market, reproduce bidding wars, pushing prices even higher. If you need a refresher on the advantages of owning real estate, like how it delivers 4 streams of income through number 1, appreciation and equity gains, number 2, principal reduction by your tenants, number 3, tax benefits and depreciation, and number 4, cash flow, I'll link another video in the description so you can check that out. But if you've done your research and you already understand why build-to-rent properties in high-growth rental markets are a great path to financial freedom, then take action right now. You do not want to miss out on this opportunity to fast-track your investing strategy. Cash in on this narrow overlap of lower rates and seller incentives while it's here. Click the link below and schedule a free call right now. It could be the most important call you make this year. If you do decide that you'd like to work on paying off your mortgage, my book, it's called How to Pay Off Your Mortgage in 5 Years, is a valuable tool that will help you reach your goal. Natalie and I co-wrote the book. You can find it on Amazon. It's like $4.99 on the Amazon Kindle store. And I recommend getting the blue cover version. That's the most recent up-to-date version. In the book, you're going to learn the exact strategy that I've used multiple times to fire the principal balance of my mortgage and reduce the life of the loan quickly. So go grab that book on Amazon right now. We'll have a link below in the description box in case you want to check it out. Rightfully, so many Americans are bracing for impact on what's on the horizon this year. Paying down your mortgage could put you in a better financial situation, but depending on your personal circumstances, it might not be the most impactful action step that you can take. If you're solely relying on your 9-to-5 job for income, diversifying in that area can protect you in the event of a layoff or other financial hardship. No matter what type of financial decisions you're facing, the most important thing is that you do so from a financially educated standpoint. I want you to be able to weigh all of your options and your risks and then decide what the best move is for you. That's why I want you to check out this next video that we filmed. It's on the foundations of financial intelligence. Please, it's a great video, and I think you should all start here if you want to start to build financial intelligence. Click this video right now, and thank you so much for subscribing to the channel, and we'll see you next time.